Guys, welcome back. So we're looking at depreciation. So we're going to try out the one of okay. Let's see. Anyone to pose the next question? It looks for the reducing balance. Depreciation using reducing balance. So if I may share the question again, for those who wanted to use the calculator, you're going to still see it here, so no worries. So now for the continuation was on delivery van or delivery trucks. These ones are depreciated at 10%, but as per using the reducing balance method. So this is the reducing balance method. Now the reducing balance method, you attach the percentage on the net book value. Okay. So if we go to our information, like we're seeing it here. Okay. Delivery trucks, we have them at 70 million. Then estimated depreciation is 14M. So meaning that its net book value now should not be 70M, but rather 56 million. So you can see that it's still manual. If you're not comfortable with the mental work and stuff, you can always use the calculator. So let me take you to the calculator. Share. Okay. So you're going to leave this blank for obvious reasons. Okay. So we said if you go to the calculator, which is under edit, then use calculator. When you click on it, the calculator will come. So you say 70 million, which is the cost, minus estimated depreciation, which is 14M. Okay, so this will give me 56 million as the net book value. Now on this is why you attach the percentage. That's the reducing balance. So times 10%, which is times 10%. And the answer will be 5.0. That is your depreciation. Please feel free to type your questions. I can't see anything. Are you sure? Let's see a paper tomorrow.
Excuse me, Mr. Katavaz.
Yes.
We can't see anything.
Okay. The calculator. I've said that you get. So then you get the cost. I hope you can see the calculator. You get 70 million, which is the cost. Okay. Then you deduct estimated depreciation, which is 14M. Okay. What you get is the carrying amount of 56 million, or the net book value. Now this is where we attach the rate. Under reducing balance, so I'm saying this times the 10%. Okay. So we get 5.6 million. Now that's your depreciation. So you go to journals as usual, and then you debit depreciation and credit estimated depreciation. So if you may go there now. Susan was asking if there's no CA is not tomorrow. We're just practicing. That's why I'm doing a few things, not all things. So you go to accountant, then make journals. Okay, so we're saying for journals, you debit depreciation. Okay. So of course you're going to insert add new. It's an expense. Depreciation is an expense. There's a difference between depreciation and estimated depreciation. So you have depreciation because delivery truck. Okay, then you save, close. Okay, it is 5.6, so put 5.6 million. Okay, and then we go to accumulated depreciation. This is a transaction and not opening balance. But I put this accumulated depreciation delivery track. So you click on it. The date is important, 31st December 2018, their end. And then you say save. Okay. So guys, that is how we capture depreciation. If you want to know your right, you can go to the charts of accounts or the P&L. Let's go to the P&L. That was when we dispose of the asset. When you dispose of the asset, then what do you credit? You credit the disposal account. The disposal account usually is not reflected on this in this trial balance. Usually it's a computation aside. You want to determine whether it was a gain or a loss. Okay, so what we end up having is you debit accumulated depreciation, and then you credit the proceeds. What happens is, okay, just to get this through small. The disposal account is just a balancing account. It does not exist like it's not like an account in your balance sheet. No. So what we normally do is you go and debit accumulated depreciation and credit the disposal account. Okay. Then for the cost, you go under the asset and then you credit the asset and debit the disposal account. Then for the proceeds, which is the amount or the money, I think I'll show it here just in a few. Let me first take it. Okay, I'm just going to go back to what you've asked. Please mute for those that are
Pardon, on disposal.
Please ask the question through typing. I will reply all your questions. Okay, because your network is poor and you just disorganize anything. So just type the question. I'll be able to answer. What did I want to talk about before the disposal? Yes, I wanted us to see the transaction that we had passed. And those are so you come to your reports, okay? And then you check P&L. Report center. So it's P&L, or you can look for journals. Journals are under come to accountant. Okay, you find the journals. Adjusted trial balance. The journals. Tax. Okay, the adjusting journals will always be here. So when you click on them, and then the period, okay, of course for the journals they were on 31st December 2019. So you want to have 31st December. Okay, 31st December 2017. Sorry, I said 2019, 2017. Okay, so when you refresh, they'll come. First December 2017, then to December 2018. My journals, not seeing my journals, just increase. accountant, make journals. And I turn back, depreciation on 31st December 2018. So as you, when you go back, you'll see that you have depreciation as this, estimated as this. Okay. Buildings, what we did. To just be sure that this past, let me use P&L instead rather than journals because I'm not seeing the information here. So I can go to the P&L report and see if there's anything. So P&L report is company financials, P&L. When you click on it, they'll still ask you to specify on the period. This was from 1st January 2018. And then 31st December 2018. First December 2018. Okay. So you'll find the figures it put there. Depreciation building, as you can see, it's 5M. Then delivery truck, 5.6. Okay, this is what we did. So now to answer the questions that were coming, how did we get the carrying amount or the net book value when we find the reducing balance? When you refer to the question, you find that you have the truck. The cost was 70M and estimated depreciation is 14. So the net book value of this truck is 70 minus 14, which is 56. Okay, we use money for reducing balance, we use money. Even if you use the charts of accounts, you must be aware that you're looking at the cost, then minus accumulated, which is still given. You can use charts of accounts. Charts of accounts. Okay. Charts of accounts is under lists, then charts of accounts, then expand. So when you look for the delivery truck, you find it at 70M. That is the cost. Now you also look for its accumulated depreciation, which is here. Accumulated depreciation for trucks. Okay. Yeah, it's showing 19 because we already included the other depreciation figure. Otherwise, before depreciation, it should have shown 14. Okay. So 14 plus the 5.6 that you have put, that's why it's 19.6. Otherwise, it should be 14. Then you say 70 minus 14 to give you the carrying amount or the net book value, which is 56. Then you attach the rate, which was 10% to give you 5.6. That's what you depreciate. Cons, I hope I've answered your question. Okay, yeah, for those who are asking about disposal. Now for the disposal, it's still a journal entry. So you come to accountant, make journals. Okay. So I'm going to make assumptions here. So assuming we're disposing of the delivery truck, okay, it had a cost of maybe 5M. So you come here, you know that when you're disposing of a truck, you're supposed to credit it. Okay, you credit the truck itself. All right. So, like I already said, ideally we want to put here the disposal account, but okay, just for illustration, say disposal account. It's neither an income, neither an expense account. Okay, it's neither. That's why it's not usually brought here. So allow me to show Excel instead because it will not work. Excel. So as I look at the disposal, as I open the disposal, you can answer the other questions. Does it mean that even for bank loan, share capital and retained earnings, we capture them through the general journal? Yes, we use general journals to capture these. Okay, as long as they're opening balances. Leave alone when they say we issued capital, yeah, or we issued share capital of 20M on cash. That's different. That's a transaction. It's not what? It's not opening balance. For opening balances, we use journals. If it is equity and liabilities, we debit opening balance equity and credit that item itself. If it is equity, you credit equity. If it's liability, you credit liability. Okay, that's for opening balances. Okay, Excel is open. Also asking about the disposal. Disposal of fixed assets. So before you dispose of an asset, you're supposed to know the asset itself, assuming now it's machinery. Let's use what's in the information. It's the delivery truck. Okay. You know it. Now, once you know it, you must know that its cost, how much did you buy it? Maybe it was 5M. Okay, then you ask yourself, how much is the estimated depreciation at the date of disposal? Okay, assuming it was 4M. Then the other thing you ask yourself, what are the proceeds? How much are they offering you for this item you're disposing of? Assuming the cash proceeds, maybe they're offering you 2M. This is the most important information whenever you dispose of a fixed asset. You must know its cost, estimated depreciation, and how much you received in return. If you don't know these two, at least you must know the carrying amount, where they give you the net of the two. So what do? We're supposed to, in practice or in theory, we're supposed to debit asset, not asset, by the disposal account, then credit asset account. In this case, delivery track. Okay, that is one. That's for the cost amount. Then for then you go to estimated. Estimated, we say that you're going to debit estimated depreciation of the delivery vehicle, delivery truck, and then we credit the disposal account. Then finally, the proceeds. Of course, proceeds, you're receiving the money, so it's showing a debit in cash, and then you credit the disposal account. So these are the entries you perform. So at the end of it all, what happens is you've actually, if I may just be specific, you've actually, because if you consider these amounts, 5M, you're saying what you have done is you go to, if this is debit, the journals. I may draw the table here. The way they appear, journal, then credit. What you have done is you have debited the disposal account, debited estimated depreciation. So you put your estimated depreciation divided by delivery track. Okay, I've debited it with 4M. Okay, the credit amount will come, but you remove it because what you put there is much later. Then after debiting this, then what other debit we have? We had cash. So you say cash account was debited. How much? It is 2.5. Okay. Then the other thing are now credits. Okay. So the credits. Guys, please mute.
Yes.
So the other things that we created that are obvious is delivery track. For this, indeed, we credited it. So you bring here the amount. How much was it? It was 5M. Okay, from this transaction. Then you come here. Where is the disposal of account? Don't do anything. Cash, nothing. So now at the end of it all, you try to balance. Now in balancing off, the other account that is affected. It's on the credit, it's a gain. It's a gain on disposal. It's actually an income account. Okay. To be the balancing figure, if you say this plus this, okay. These are the journals you pass for either a gain or a loss on disposal. In case you sell off a fixed asset, these are the entries we do. Now this happens if there's a gain on disposal. If there's a loss on disposal, then here you have the debit being less, and therefore the balancing figure will be on this side. Have I answered someone who asked for disposal? What of the other numbers we have? Opening capital, balance capital. I've not understood, Harriet. Otherwise, today we're looking at assets and depreciation only. Okay, sweep up. Pardon, when we dispose of assets. I just explained it. I hope we are covered. How do we charge the reports? Okay, shall see that. Then tell us more about, is it a must to less of automated depreciation? Yes, cons, it is a must if you're using reducing balance method to depreciate. It is a must. Then so when do you use the asset register? Harriet, I would advise that you forget about the asset register, really. But otherwise, if you want to use it, you only use it if you're using straight line method, because the asset register will just give you the cost. Okay, so when you're using the straight line method, you can use the asset register. Harriet, I hope I've answered your question. You are not replying the questions. Where are the questions? Okay, I've answered most of the questions here. First, go back to the calculator. Okay, it's fine. So guys, now these are the journals we pass. So I think this is clear that you go under accountant, then make journals. So you put estimated depreciation debit, cash debit. Maybe we can pass this one. Let's pass this in our working. So come to the assets, to the QuickBooks. We're here. So we're saying I'm going to debit estimated depreciation with the motor vehicle by 5M. Okay. When you click here, the credit will come automatically, but I've said you delete it because it's not going to work. We're still debiting. So you debit cash and bank. Where is cash? I don't have cash here. Let me add it. Okay, cash, which is under banking, under bank, continue. Then you say cash. Then you say close. Okay, we got 2.5. Okay, as you can see, but here we're saying the credit is not 7.5, but it was just 5M. 5M. And it is on the asset itself, which is the delivery vehicle. Or is it delivery truck? Okay, and then finally, we said there's an income. As you can see, it's the balancing figure. This must balance with this. Well, this was 4M, if I remember correctly. One of them was 4. I think this one is 4. Yeah. Okay, so this is not 2, but rather 1. Okay, so what we put here is an income account. So you add new, come under income, then you say continue, then you say gain, dispose, then you save and close. So this is how it will look like. Then you save and close. Yes. Okay, so if I look at my report of P&L, report center, then P&L. When you click on it, and we capture the period, this is first January 2017 to 31st December 2018. 1st December 2018. This is supposed to be 2018. And I say refresh. Okay, you'll find here the gain on disposal here. Are you seeing it? Gain on disposal 1.5. And I'm going to use this to extract the PDF. Someone was asking for the PDF report. So guys, that's how we capture disposal. And someone who wanted a calculator, you come to edit for calculator, edit, then use calculator. Okay, when you click on use a calculator, it will pop up. You'll see it. I can share it screen. To go up like that, it will show up like this. There. Then you type in what you want. I had tried out earlier 70 million. Then we deducted 14 million, which was the depreciation. Then we got 5.56. Then we attached the rate, which is 10%. Then end up with 5.6. So the one asked for a calculator, I hope you have seen it. So let me close this. So let's look at the PDF. And I'm stopping on that, you guys. Okay, so this is your report. Okay. When you go to, you come here. So on the home page, you scroll through, you will see something to do with, where is it? So on page file, then you print as PDF. Okay. I can repeat. I think it is, what is this? Rona. You come to file. Once you have your report here showing, you come to file, then you say save as PDF. When you click on it, the options will come. So you go and look for the file or the folder where you're putting the information. Go to desktop, then look for the folder. Let me see if I can get one here. Let me use final here. When I click on it, it will open, then this will come. So you save the name, assuming it is P&L and loss. When you save it, this will come. This comes when you don't have, if your PC, your computer, does not have a PDF reader. This is what will show up. Meaning it won't work or it can't work. So the technicians are aware. So whenever it fails, they tell you to use Excel, which they will still mark because it's their fault that they don't have a PDF, and also don't have PDF. So that's why I said that. Aaron, I hope I've answered your question. Okay, let's see any questions here. For share capital, we debit opening balance equity, even share capital. Yes, because this equity. Then how do we record? Okay, Davison has answered Emily, so that's good. Okay. For the loss, you put it under expenses. Yes, for the loss, you put under expenses. How about, okay, yeah. What if it was a loss? I hope you answered iPhone. I will answer you regarding the loss. What if assets are added with their own? Super Power understood this question. What if new assets are added with their own depreciation? If you had you had assets already existing at the beginning of the year, then you added some new. Okay, you bought some new assets. If it is straight line, you just add the cost. Okay, you're saying the opening balance began with 20M. You have bought extra assets at 10M, hence 30. That is your new cost times the rate. Okay, if it's a reducing balance, you're saying this is the cost which you had at the beginning minus estimated depreciation, which it came with. So it will give me something like, if it was 30M minus estimated of 10M, to give you 20. If you have any additions, you add the addition on the 20 to come up with the carrying amount, and then charge the rate. Okay, okay guys, allow me stop here for computerized accounting. Okay, please be sure to learn how to use the reports, how to extract those reports. Be sure to learn those, because if you don't know how to come up with the report, you're going to have issues. And the folder and things like that. So let's resume in, let me see, in 10 minutes for Z score and FSA.